Citizens of the world, welcome back to another Keep Yours podcast where we try and keep a few more dollars in your pocket so you could spend them on the things that you want to. Today we are talking about PPP loan forgiveness, and it's confusing. The whole program is confusing since they rolled it out immediately. I mean, what do we expect? A government program that rolls out in 1 week is supposed to be comprehensive and make sense and fair and all the rest of it. No, it's none of those things. So it is what it is, and we're going to deal with it. And for a lot of businesses, this is A, lifeline, B, it could help a lot of people just continue going or make businesses that are strong a little bit stronger as we all try and deal with what is inevitably going to be we're down 5% in GDP, so we're in a depression state. 25 to 35 million people still on unemployment. We got a lot of problems. So this is going to help businesses, and if you are from self-employed all the way to a business owner of up to 500 employees, this applies to you. And if you haven't gone and gotten your PPP money yet, there's amazingly still money available. So if you were a business who weren't sure if you were eligible or not sure if you're bringing back employees or didn't want to start your 60-day clock, you can still go get money. It's still available. So if you haven't done that, go back, listen to those podcasts, and go apply for your PPP money. Well, today I want to start with the Treasury guidance. So last Friday, pretty late at night, right before a holiday weekend, thank you, Treasury, they released a bunch of guidance. Now, some of this guidance was requested by banks and is kind of specifically geared towards the banks. But if you don't take pieces of all of these different Treasury guidance documents, it's really hard to understand comprehensively what's going on in this program. And what I've read a lot about on social media the last couple of weeks, a lot of business owners worried about, am I even eligible to keep this money? If I still have an ongoing business that wasn't hurt, or if I'm not bringing employees back, lots of questions around just, hey, do I have to worry about the federal government coming and saying this is forgiven today, but oh, wait, now there's new guidance that says we've got 6 years to come check you out. And then they're going to come in and they're going to say, oh, well, you weren't even eligible to begin with, so we want all of our money back. And meanwhile, those of us as business owners have spent the money, plus apparently we're going to pay taxes on it too, and it's going to be a huge mess. So for some of the companies that are a lot bigger, that could be an issue. For most small businesses, that's not going to be the case. And we're going to get into the specific Treasury documents. They're all in the show notes, and you can use the ones that I have highlighted because they're also bookmarked if you like that. So let's get into it. Eligible new businesses. The new Treasury guidance is specific to both the banks. So this first document that I'm going to bring up is, and these are literally labeled the same that they are on the Treasury website. So PPP, interim final rule, small business administration, loan review procedures, and related borrower and lender responsibilities. So this says what's the responsibilities of the lender to collect documents from you. And in this episode, we're talking more about strategy and how to, what costs are going to be forgiven. And then I'll do another one on the actual mechanics of the form that they released for forgiveness, which on its face looks way overly complicated. But once you dig into it a little bit, it kind of makes sense and sort of has a flow. We'll do that one next. But first, let's figure out what money we can get forgiven and then make sure we do our documentation. Because for most of us, we're still a month out from being eligible to file to get our forgiveness. All right, so the SBA came out and they said we're going to be able, well, Treasury came out and said the SBA is going to review all of these loans, be able to, as appropriate as described below, right? So they basically said, hey, we've got 6 years to do this, right? And the administration, here's the kicker. The administration may review whether a borrower is eligible for the PPP loan. So whether or not you are, whether or not your certification that uncertainty required that you get this loan. Now, required is one of these crazy words. Because what is required? And, we're not going to die if we don't get the loan, but our business may very well fail. But what if our business is still ongoing? There's still a ton of uncertainty. It doesn't mean that our sales won't fall. It doesn't mean we don't have supply line interruptions. It doesn't mean we don't have other problems. As you see right now, like let's take, for example, a meatpacking plant. Now, most of those aren't going to be eligible for these loans, but they provide a nice example. So if I own a meatpacking plant, the meatpacking plant's considered critical infrastructure. It's feeding people. So my plant hasn't closed down, but I've got a whole lot of unknown costs. Every time someone gets sick, we have to come in and do an extra cleaning. People who are now sick and out aren't working, so I have to hire other employees and train them and spend the money to train them and have extra staff so that when people do get sick, then we can still keep the meat processing plant working. So uncertainty is pretty much a guarantee. So here's how you need to interpret the uncertainty, because again, if you don't play with all of these Treasury documents, you don't understand the pieces. Here's the piece that's important. And this is in Treasury PPP, frequently asked questions. And I added the date onto the end of this, of the 5/22/20, because they keep updating this frequently asked question. Now, they are just adding to it. I haven't seen them change any of the prior questions, so that's at least a good thing. But if on the one hand, the previous document is saying, when we're looking at, hey, here's what the SBA is going to review, right? This is what the SBA says, we'll review whether a borrower is eligible. Okay, well, if you don't combine that with this document, you're confused. So this document, the frequently asked questions, says, how is the SBA going to audit, we'll say, the borrower's good faith certification requiring the necessity of a loan request when the CARES Act was written with the words uncertainty? Well, I still have uncertainty today. I don't know what's going to happen next time an employee gets sick. How do I replace that? I have key employees. You can't just replace them. And it's not just like, oh, this guy who specifically knows how to work on this piece of equipment is sick. Who's going to work on that? Oh, let me just call somebody and get a temp agency. And it doesn't work that way. There's interruptions in supply lines. And the way that the CARES Act was written, uncertainty is a certainty. That's the only certainty we have, is that we have uncertainty. So here's what you need to know. If your business got less than $2 million in a loan, then you don't have to worry about this certification. And really what Treasury is trying to say here, even though that's not the way the CARES Act was written, what they're trying to say is, if you have access to public debt markets where you could go and get money, which you see even the airlines and cruise ships can issue bonds and get money. If you have access to these things, then this program's not for you. Now, again, that's not necessarily what the CARES Act says. So for people who got a lot more money than $2 million, they're going to fight it out with Treasury over whether or not they were eligible and whether or not they, had access to additional markets. But for all of us who are small, here's the other way to think about this. If I go to my bank right now and I ask them to loan me $200,000, what are the odds they just say, sure, no problem? Very, very unlikely at this point. In fact, the bank's probably going to go, no, absolutely not. We are not lending that kind of money, especially unsecured. So if you took it on what's the same type of loan amount and could I go get that loan? So could I go get up to $2 million unsecured, meaning attached to no assets, for my business? Virtually impossible. First of all, banks hardly ever loan any money unless it's attached to assets. So if you've already borrowed money against your assets, maybe you can't get money anyway. Maybe you could, maybe you couldn't. But banks are very, very stingy right now about credit. Credit is dried up. So for all of us small businesses, the idea that we can go access credit whenever we feel like it and whenever we want is absolutely crazy. You can't. We're not going to be able to. So the Treasury's basically come out and said this. And if your loan is less than $2 million, you don't have to worry about them coming back and saying you could have potentially found money elsewhere and you didn't necessarily need the PPP money. Because that's not the point. The point from Congress was, hey, let's flood small businesses with money to keep people on payroll. We don't care if they're surviving or not surviving or what they're doing. We just want those people not on unemployment. We want them on payroll. And we're hoping that we get past this 2-month period where we're giving you the money, and then after that, you want to keep them. That's the entire premise of this entire program. So for everyone less than 2 million, you don't have to worry about that. And I see a lot of stuff on social media where a lot of business owners are very worried that the government's going to come back and say, hey, you're no longer eligible. But again, you have to tie all of these Treasury documents together. So done with this one. I think that's the only thing in this in this one that was important. Yeah, didn't bookmark anything else. Okay, so the other thing that I want to discuss real quickly is the lender requirements. And the reason that I go through the lender requirements is that if I understand what my bank has to collect, then I understand the documentation that I'm going to need. So I don't want to overdo this or kill this. But basically, here's what the SBA is saying. So the last part of this 1F is just to let you know that if the SBA determines that you're ineligible or your forgiveness amount, that they don't like it and they want to challenge that, you will have the opportunity to appeal the SBA's determination. But I got a feeling for the most part, if you follow the rules and you're eligible, they're going to try and do this the right way. And there's a ton of loans. So if you're providing good documentation to your bank, then you probably won't have to worry about this. Okay, so here's what a bank has to do. And if we understand the bank side, then we can understand our documentation requirement side, which then when we go to fill out the form, will make life a lot easier. All right, so the bank has to confirm receipt of all documentation as specified in the application form, and we'll get to all that. The bank's required to confirm your calculations and make sure that you've calculated loan forgiveness correctly. So lenders are expected to perform a good faith review in a reasonable time of the borrower's calculations and supporting documents concerning amounts eligible for forgiveness. So what does that mean? That means when you put amount down on that form, so you say, I paid the phone bill for the company. Well, support that with the statement for the phone bill, right? Or, hey, okay, then I wrote check number 11537 for this phone bill. Hey, do you see 11537 made out to this that goes through, hey, you, my bank? It's on my bank statement. The check is there. The image is there. Hey, that's where it went. Good to go. So that's the documentation that they're going to want. The borrower should not receive forgiveness without submitting all required documentation to the lender. So this means if you just think, hey, I'm going to send it off to you, and I'd filed a Schedule C last year and I have the same expenses before, so I'm not providing you with the bills or the canceled checks or the credit card statements that show that I paid all this, the bank can't submit your application for forgiveness. So we are required to track all the documentation and provide that documentation to the bank, or they can't pass it along to the SBA. So that's important, knowing that, hey, your bank has these requirements. So when your bank comes and asks you for all of this documentation, don't get upset about it and say, oh, it's a burden. Know that it's coming and know that, hey, I have to provide these. Okay. So the lender does not need to verify the reported information if the borrower submits documentation supporting its request for loan forgiveness and attests that it accurately verified the payments for eligible costs. So what does this mean? What this means is that they don't have to independently verify. So they don't have to call Xcel Energy and say, hey, do you have an account set up for this customer? And did they pay the amount? Which might happen in an audit, for example. Want to verify that these accounts actually exist and they're not fraudulent. So they don't have to go and make sure that, if you supply fraudulent information to them, oh, I paid all of these bills, and make up that you paid bills that you didn't pay, the bank's not responsible for confirming that. It's basically, if there's reliable supporting documentation, the bank can go with that. And that's important because The banks, unfortunately, are not being paid to verify all of this for you. So realize that they got a fee to give you the loan. Now they have to do all this forgiveness stuff basically for free. I think that's the last of the important stuff. But here's the other piece. So if the SBA decides that it's going to review your loan, they're going to notify the bank, and the bank has to notify you. And if they do notify the bank, so basically my understanding of the way this is going to work is you provide all this information to the bank. The bank submits a form to the SBA that says, oh, we have reviewed all of the information. Here's the amount for forgiveness. And if the SBA goes, oh, we'd like to look at that, then the bank sends them all of your info. It's possible they're sending it all up front, but I doubt it, because if they were sending it all up front, then why would they request that you send it all after they start a review? So know that it's going to happen, and this is where I'm saying the lender fees, there's no additional fees for the bank. So if you want to read the rest of the lender rules, they're on the Treasury website. That's where I'm pulling all this stuff down from, and basically what I'm doing for all of you is just synthesizing this. So at the end of the day, Treasury's got 6 years to review your stuff. We're going to need the paperwork to submit it, because that's what the bank is required to have. The good faith certification on necessity of the loan request, $2 million. So if you're more than $2 million, you're going to consult your CPAs and your lawyers, and you're probably not listening to me anyway. If you got $2 million in this program, then you're probably not here listening to me. You've got professional resources to go through your stuff for you. And here's the last thing is it could change. Congress says it wants to change the rules on how long people can use the money, what percentage they can use, because the Treasury said 75% has to be used for payroll. The CARES Act doesn't say that. That's what Treasury said. So that's an interpretation, not necessarily the law. And who knows how long this stuff will take to be litigated, but more than likely Congress will probably come back and change something. At the end of the day, what Marco Rubio said, and he apparently was on the committee that pushed all of this through, is that this was intended to be a grant program. So Congress has said this money's supposed to be forgiven. So I don't think there's going to be a ton of fight if you're really eligible for forgiveness. All right, so now we get into, let's get our money forgiven. So step one was obviously we got to go get the money first, right? So now we got the money. Now we're concerned with how we have to spend it and all these rules they keep making up. So we go, okay, is this a loan, or is this going to be forgiven? And how am I going to figure that out? How am I going to calculate that? Because obviously we all want these loans to be forgiven, because that gives us more money, capital for our business, and especially with the losses that most of us will have from reduced operations, that's going to help us survive. And that's the idea. The idea of this whole program is help businesses survive and help keep people on payrolls. I mean, how many more people would be on unemployment? And how many more people will be once this program's over, because businesses aren't still operating and running out of money? But we're not going to go there right now. All right, so understand whether or not this amount for you is a loan or what's going to be forgiven. We're going to go through some strategies here. So again, the rules. Payroll expenses are what it's supposed to be used for. Treasury says it's limited to 25%. We'll see. That's TBD. Rent. So if you own the building, you can only do interest expense, but otherwise rent is part of the deduction. And then the other thing is utilities. And utilities is expanded. So usually when I hear the word utility, I think electricity, gas, water. The transportation's thrown in there, but I don't know what transportation means. I assume that means if you're paying for bus passes and stuff like that for employees. The other thing that they added in here is telephone and internet. And that, for a lot of small businesses, especially those that pay for their phones for a lot of employees, that could be a real number. And internet as well. But rent's going to be the big one, and payroll's going to be the big one. Okay, so you have, and I'm actually wrong on this. I put on here you have to spend it within 60 days of receiving it. You actually have 56 days. Okay, so this got really confusing because all the calculations that we did for how much money we can get were based off 2 months of payroll. And then Treasury comes back and they go, oh, well, the CARES Act says it's for 8 weeks. Okay, so we're taking 2 months and converting to 8 weeks, right? This isn't even like metric to imperial. This is, just madness in terms of, oh, I thought we were talking about 60, 61 days, 2 months of rent. I mean, heaven forbid you happen to get your loan actually got, put in on, the first of the month, and then all of a sudden 58 days later, there's not another rent payment due yet, and you don't get to deduct 2 months of rent. It's possibly that happens to you. It's absolutely crazy the idea is really 2 months. The 56 days is going to be used in here a lot for self-employment people. And they're using this 50 seconds, 8 weeks out of 52. So I'm sorry, that's not actually 60 days. That's 56 days, which is just 8 weeks. Okay, so it goes. All right. Any amounts that are not forgiven become a loan that you have to repay. Now, Treasury guidance has come out on this where they're saying, hey, you have to pay it back within, I think they said a year. But that's not what the CARES Act says. So the CARES Act says something completely different, and they'll hash that out in terms of if that's actually a loan to you, how long do you have to pay it back? I think the original CARES Act said multiple years. But if you are going to have money that's not forgiven, then we'll deal with that later. Hopefully you can figure out a way to bring employees back and get all of the amounts forgiven. All right, so limits of forgiveness. They're going to reduce your forgiveness amount if you have a reduction in your full-time employees. Now, on the actual forgiveness form, there is a safe harbor provision, which basically says, like, if I haven't laid anyone off, I have the same. I haven't done layoffs. So, because the issue that everyone has with this is we have a natural flow of people, right? People quit, we hire people, we add people, we don't. Some people leave, we don't necessarily replace a position. It's called business and life. So trying to nail that down to did you get rid of somebody? It's basically, here's the idea. Did anyone from your company end up on unemployment because you laid them off? If that's the case, then, and you did not bring them back, because there's several things in the forms that for forgiveness where if you did specific things, then you basically get a pass on this. But we'll go through this a little bit, and maybe it made sense to bring back part of your employees. Maybe you're a restaurant, you're doing takeout, so you brought back the kitchen, but you haven't brought back all of your servers and busboys. Something like that. So there is the potential that only a portion of it's forgiven, but hey, a portion of money is still, free money. So we want to take advantage of that. And they're going to calculate that based off of full-time equivalents. Full-time equivalent is 40 hours. So if you've got 2 people working 20 hours each, that's 1 full-time employee. And if you've reduced your employees, then there's an issue. Now, you get to choose the period. So you can either use middle of last year, which is weird. I think it's just the same period last year. Or you can use the beginning of this year. So you can use either one as your reference point for, did I lay off employees? So let's say here's the idea. You laid off employees last November. That doesn't count against you. You can use the 1/1 to 2/29 period to say, hey, I only had 10 employees in that period versus maybe last year I had 15 before we downsized. So if you've previously downsized before the COVID epidemic hit and the country was shut down, then they're not going to be penalized for that again. And even though your loan amount could conceivably include a lot of those people, which then you would have gotten more a loan amount than you have payroll costs for, and everything becomes a little iffy. So there's also, if you reduced people's wages more than 25% and they make less than $100,000, then that's actually a dollar for dollar reduction. And however much the amount is that you reduce their salary, that's the amount that you don't get forgiven, which is understandable, I'm going to say, right? The idea is pay people what you paid them before. And if it's free money, I don't know why you wouldn't, at least during this period, don't reduce the wages anymore. Pay them more. You get it forgiven. It's free money. Okay, so let's remember how we got to our original PPP loan amount. 2.5x payroll for 2 months. Okay, so they expect you to pay rent and utilities to be 25% of your payroll costs. And depending on if this is or is not true, then you may need to do some adjustments. And those adjustments might be giving your employees a bonus. And I had this situation myself where I said, because of the business model that I have, I don't have a very high rent cost. It's sort of implied. And therefore, my payroll cost is the majority of my costs. But when I looked at what I pay for utilities and what I pay for rent and what I'm paying for payroll and the amounts they gave me, I was like, well, some of this money might not be forgiven if I only do what I did before. If I use the exact same amounts that everybody was making, because my rent is not and utilities are not 25% of my business costs. I said, oh, okay, well, payroll has to be at least 75%, but it could be 100%. So my strategy was give the employees a bonus. Because if I give the employees a bonus, then that counts as wages paid. And yes, they're making more per month than they did before. Why not? Who shouldn't get a bonus for working through these times? So give it to the employees and then it's deductible or forgiven. So that money, is essentially, I view it as not necessarily mine. The government's giving me money to pay employees. If they give me a little bit extra, I can either give it back to the government or I can give it to my employees. That's not a decision. That's a no-brainer. Give it to the employees. Help them out. Pay them more, right? Okay, so the example I'm going to use throughout this, just to make math easy, is that you had $40K a month in payroll in 2019. So they gave you a $100,000 loan. And the loan is for $40K of payroll and $10K of utilities per month, according to this, at least $40K of payroll. Again, 25% rule. Okay, so we'll go through this. And the reason that I'm putting numbers to this for you is that you'll see the example and you'll go, oh, okay, even if all of my money is not going to be forgiven, how much of it can I get forgiven? And how much of it am I going to have to give back? And that's what we want to know. And obviously we want to strategize. Again, maybe it's, I'm going to give employees bonuses. But if I only brought back half of my employees, then only half of the potential bonuses because of this FTE requirement. If I only brought back half of my people, then if I give the current half I brought back big bonuses, but I don't get that I only get half of it deducted, now all of a sudden half of that's coming out of my pocket, which might be okay because again, if they gave you enough money to do it, you strategize. But this is what you need to do right now. You can't do this after the fact because you have to actually make the payments and give people the money and run the payroll before you can get the money forgiven. So, strategies. But before we get to strategies, let me just throw in a little the bad news. The bad news came out from the IRS, and the IRS says no escape from the tax man. So if you get the loan forgiven, then the expenses attached to that loan are not deductible. Okay, so we got to pay taxes on it. So it's not as good a benefit as it was if it was truly free, but it's still a pretty good benefit. And for any businesses that are going to have losses, it's hopefully offsetting those losses. Now, there's an interesting thing in here for self-employed people because this is going to be income to you, but I don't think it will be taxed as self-employment income in the same way that if you receive unemployment benefits, that's not taxed as unemployment income either because it's not employment. So employment incomes meaning subject to Social Security and Medicare tax. And for self-employed people, that's a big chunk of money because you pay both sides of it. Typically, if you're an employee, you pay 7.65% and your employer pays 7.65%. But if you're the business owner and you're self-employed, you pay both sides. So that's 15% just in payroll tax. But payroll tax only subjected to payroll wages. So I don't think for self-employed people it's going to be taxed as self-employment tax. It should just be taxed like unemployment dollars would be, which is just other income. So you pay income taxes, but not self-employment taxes. That, again, could be 15% difference. That could be a lot of money for people. All right. I say left hand, right hand on this, on how they're calculating it, but essentially, when they say the expenses are not forgiven, okay, so this isn't income and these aren't expenses, but really the easy way to just look at it is the amounts forgiven are taxable income. So if you put the loan on your books, and it goes under your liabilities. So you get it. They give you a $100,000 PPP loan. So the $100,000 goes into cash, and the other side of that is now I owe. So on my balance sheet, I owe the government $100,000. Now let's say all of that's forgivable. So you go, okay, well, I don't have this liability anymore. So that's one side of the transaction, to zero that. So now I don't owe the government, and now I have basically other income from the PPP loan. And that's where I'm putting it on my financial statements so that my accountant can see that when he goes to file taxes, he knows exactly where it's at. It's not hidden in the middle, or I'm not trying to say, that loan goes away, and then over on the other side, I'm going to get rid of the expenses that I have for employees and show the expense reduction. That's probably what your accountant's going to do at the end of the day. But now you've hidden the transaction from them, so they have to go find it. So instead, put it down into other income and just make a new account that says PPP loan forgiveness. So that's a little help for bookkeepers or self-employed people. Like, where do I report this? And report it as other income instead of, hey, the income's not there and the expenses aren't there. And then that may be a little too into the weeds for most people, but is what it is. Okay, if you have losses in 2020, then obviously this income could offset some of those losses. But know that there is a taxable event for any amounts that are forgiven. It's just the reality of it. The IRS says income from whatever source derived, free money from the governments, they consider that income to the business. So it is. Except Congress says they don't like that. We'll see if they do anything about it. Obviously, they could change it. We still get these constant changes. Like I said, the Treasury keeps issuing interim final rules. I don't know what the word interim final means. It doesn't make any sense. From an English perspective, my English teachers would go absolutely crazy and go, interim and final cannot be the same sentence together. That is an oxymoron. Interim means that it's for now and not permanent, and final means that it's final. So who knows? Once again, government speak of nonsense. And I don't understand why they can't just say it's an interim rule and, we might change it. Instead, they put a final on there and then they change it. Weird. Okay. So strategies. We're going to start with self-employed people. So strategy number one, you're self-employed, but you do payroll. Okay. So this is typically the owner-only S Corp. All right, so you have payroll because you're using the S Corp function to have partly payroll and partly earnings to avoid that 15% self-employment tax, which is a wise strategy. So if you paid yourself more than $100,000 in 2019, then you're limited to $15,384 of a deduction or loan forgiveness amount, which is 850 seconds. So again, they're going 8 weeks, not 2 months, 8 weeks. Now, for this particular case, if you are the sole member of this S Corp, the question is, the Treasury guidance says no forgiveness for retirement or health insurance for self-employed. I'm assuming that what this means is there's no employees. So if there's a retirement plan, it's a solo 401k, which would be a deduction of the business. So I'm not sure why, if you're self-employed and have a business as S Corp, you wouldn't get that deduction. So there's going to be some additional questions on can I take the health insurance and can I take the retirement contributions if I'm the only member? And it appears that they're saying if you're by yourself, then you don't get those deductions. But if you have at least one employee and therefore it's a company plan, then all of a sudden you would be eligible for those deductions. So it's a little there's still some gray area here. It's not. And obviously, health insurance costs and retire benefits, those could be real numbers. As expensive as health insurance is, that could be a real number. But here's the thing: if you file this S corp and a W-2, the deductions for health insurance don't come on your business form. They actually revert over, and it's a different line item. So I think that's the way that Treasury is trying to treat all of this. Is kind of Treasury and the IRS are together and going, okay, how do we figure out who gets what? And I'm not sure why, if I have one employee and I have a plan set up for retirement and I contribute to both of us, I get the deductions for both. But if it's just me, I don't get that deduction. I'm not sure. And if I did it, I'm not sure why that's the case. But that's, again, it's what Treasury wrote in. And I'll take you specifically to their guidance. So this document is the PPP, Interim Final Rule Loan Forgiveness. And this came from Treasury last Friday. So it gives requirements, defines payroll costs, talks about interest on real property and personal property, which also means that those that we include amounts. So even if you're a small business, let's say you're a small business and you run a limo service, well, the interest payments on the payment for your limo are deductible as part of this. So here's what it says on owner employees and self-employed individuals. So first it says 850 seconds of 2019 compensation. So again, it's based off of last year, or $15,000. That's the max if you paid yourself more than $100,000. Okay. So it says Schedule C filers are capped by the amount of their owner compensation replacement calculated on 2019 net profit. So even if your profits went up this year, they're saying it's based on last year. That's what the guidance says. So that's what we get to go with. Okay. So here's the part on health insurance. No additional forgiveness is provided for retirement or health insurance contributions for self-employed individuals, including Schedule C filers and general partners, as such expenses are paid out of their net self-employment income. Okay, so self-employed individual, does that include a W-2 employee of a single member S corp or single member LLC being treated as an S corp because their S corp is only a tax designation? It's not real clear here. So I'm not sure. And they're going to probably have to ask the Treasury for guidance. Maybe that'll come out in one of these future FAQ questions. What's considered self-employed? If I have a W-2, am I self-employed? I don't know. A lot of times those people are considered, if you have that situation for unemployment, you're self-employed. As far as IRS is concerned, I don't know. But this is why it's a question mark. So, but that insurance costs and retire benefits can be big. But one of the other things that they do have in here that's interesting, and this is this first item, additional deductions for utilities and phone. So what's interesting here is that it could be up to 3 months. So where is that calculation? There is a non-payroll costs. I think it was one in one of the other documents. I think I closed it already. But basically what it says is that the business utility payments can be both those that you paid for and those that you owe, which kind of basically gives you 3 months instead of 2 months. So if your phone bill got paid after you got your money twice, and then you owe another phone bill, and the bill comes before the end of your 56 days, then you can deduct all 3 payments. So there might be an additional utility payment, an additional phone bill payment, and that may mean you need to go pay your phone bill early because that's how it deducts it. And then we have the same thing with payroll, which we'll get to in a second. And I'd love to find that real quick for you, but it's okay. We'll come back to it. All right. So if you're self-employed with a S Corp, again, 850 seconds, limited to 15,000. Now, if you did have a home office deduction for rent, you should be able to do the 850 seconds of that expense. Whatever 2019 was, they'll push over. You can't increase it. They're gonna question all of that stuff. And obviously, in theory, there's more scrutiny for the self-employed because there's more questions about how you get to the expenses. On the other hand, if you're a sole proprietor, then you're seeing that the total limit that you're going to get, maybe you got 15,000, but even if you were limited to the 100K base anyway, right? So when we did the 100K divided by 12 times the 2.5 to get to our PPP loan amount, the maximum you're getting if you're self-employed and you make 100 grand a year, you're still getting about a little over 20 grand. So the idea that they're going to come scrutinize a lot of these loans when the amounts they're going to get back are going to be small. It's not small maybe to you because you go, hey, if I can get $15,000 forgiven, that's a chunk of change, especially if you're still working. Great. Hey, that might help you grow your business or expand or do something else, or might just help get you through the times. But when we're looking at this from if the SBA wants to come challenge your loan, there's not a ton of money to come get. When we talk about, oh, hey, there's another side of loans more than $2 million. Well, let's go look at those calculations because that might mean that you get hundreds of thousands of dollars back, not potentially $3,000 or $4,000. Or let's say that you included your health insurance costs of $5,000 and you got 2 months, right? So $800 of health insurance costs, and the SBA is going to come fight with you over an $800 deduction. It's the amount of time that they will spend coming to argue with you over $800 is not worth the time for either party. So just like the IRS doesn't come and knock on your door when you paid $1,000 in taxes and goes, well, you might owe us $10 more. We're after spending our time trying to get real money back. The SBA will be doing the same thing. So the SBA is not going to just go try and find any and every person to challenge their loan request. So knowing that, then you're going to go, okay, let me try and maximize these deductions because it's unlikely they come and look at the self-employed amounts, with the exception of they're expecting the banks to do this. So for this W-2 single member S Corp owner, health insurance and retirement benefits, I don't know. If it's part of a plan with more than one person, probably so. If it's just you, maybe not, but it's not clear. All right, so now if you are self-employed, Schedule C, you don't do payroll, you don't get a W-2. So no health insurance, no retirement benefits. We just saw that. But rent is still a reality if you paid it last year. So if it was on your Schedule C that you paid rent, then if it shows up this year, again, probably going to be okay. Same thing if you deducted part of your house. Okay, so previously we thought, hey, if you're self-employed, and you do W-2, but let's say last year you paid yourself, 2019, you paid yourself 50 grand. You go, oh, well, I'll pay myself 100 grand. That's why Treasury came out and they said, no. 850 seconds of 2019 income. So it goes. So you can't fudge the amount they're going to give you. Everything's based on 2019, so 850 seconds. So this is pretty easy calculation, but if you did your home office expenses, 850 seconds of those should be deductible. Your phone, your utilities. Now, again, that gets complicated when you go, oh, hey, what were my expenses? And here's the easiest way to do it. You look at your Schedule C, which Schedule C is the form if if you don't know what this is, your Schedule C is the form for self-employed people to file on your taxes. That's the schedule and the taxes. So that's what we're talking about. If you look at that form, which you or your CPA might have filled out, and maybe you never looked at it, but if you look at that form and you look at what are the expensible things that we have here, we have rent, phone, utilities, and wages. So the wages is locked in. That's based on last year anyway. It's a set amount. You know what that is. If you deducted your telephone expense for your cell phone last year, then it's going to be okay to do this year. If you did a home office deduction, which includes rent, utilities, etc., that same 850 seconds of whatever that number for 2019, that'll be what you can deduct. And if you're self-employed, this is pretty much it. It's a done deal. You're good to go. And you can probably turn me off unless you want to know what businesses are going to do next. All right, so we move on to businesses with employees. Okay, but in the first example, still shut down. So let's say you're a restaurant and you aren't allowed to open yet. The other issue that we've got right now is employees making more from unemployment, and they've given out some guidance on this, and it's ugly. But basically, what you need to understand is the percentage rules. So if you bring back reduced staff, less of the loan is forgiven. But this could still make sense. Like I said, if you're a restaurant, but you open the kitchen and start doing takeout, and that works for you, then a portion of your loan may still be forgiven, i.e. whatever you're actually paying, and then the rest of the loan is a loan, or you just give it back. So again, we'll go to a 100K loan, which means that before you had 40K average per month of payroll, 8 employees making 5K each, just to make the math real easy. Okay, let's say we bring back half the staff. So we bring back 20K in payroll expenses per month. And the owner amount, again, is limited to that $15,000 in total if you're paying yourself, which you certainly should be. But again, how much of it is forgivable? So if we brought back half the employees, then our loan forgiveness would be limited to $50,000. But realize that, hey, that's still 50 grand. And that's still 10K of that's going to be available for rent and utilities, which might pay your rent for a month or two, might be less than the total, but might help you get there. Depending on when the business reopened, you got to do your math on whether it makes sense for your business. Now, here's the real kicker with this. If we actually go to the form for forgiveness, the actual application form, and I don't know if I've bookmarked this. I have. All over the place. Too many things. Or maybe they must have done this one, because these don't look like mine. Those are not my bookmarks. This one's actually bookmarked from the SBA. Okay, so there are safe harbor provisions in here, right? Which means that the amounts forgiven won't be reduced if there's certain things that you did, right? So here we're at the 8 weeks for compensation, and here we're looking at the borrower's average full-time employees. But if you've rehired everybody by the end of June, I believe is the date, then it doesn't apply to you. So you don't have to reduce the amount. You can actually take the total that you spent. So in this example, if we spent $50,000, so if I spent $20,000 on payroll in the 2 months that I had this, so that's $40,000 that I've spent, right? Well, the way that this works is you know, the loan forgiveness is 50% reduction of the amount that you spend. But if you hire everybody back before the end of the period, that doesn't apply to you. So you get the total amount that you actually spent. So that's the problem. If you actually did this, the loan forgiveness amount is limited to the $50,000, but then it's going to be reduced. Sorry that the screen flipped. Backspace that. Doesn't work. There we go. So loan forgiveness amount is limited to a $50,000 total because that's what you spent, right? But that amount's going to be reduced 50% because you've lost your full-time employees. You only have half of them. So the limit of the forgiveness of what you spent is half. So you'd only get realistically $25,000 here, right? So the idea is that if you don't spend it, it's not yours, right? So how do we spend it and make sure that it is ours and spend it on things that we need to spend it on, But depending on when you're going to reopen, you got to do the math on whether or not it's really going to make sense to you. And here's the other thing. It's not the same employees. It doesn't have to be. If you had 8 people on your payroll, you just need 8 people on payroll, right? So there are definitely ways to cheat the system on this one. Put everybody in your family on your payroll. So instead of bringing back 4 employees and paying $20K in payroll expenses, put 4 other people on payroll and pay them, because if they're in your family, put your husband on or your wife on, put your kids on and pay them, because again, that money's going to be forgiven. And now all of a sudden you have 8 employees again. So there is some, is it cheating? Sort of, right? And the other thing is if you have employees that don't want to come back because they're making more on unemployment, they made it really bad for us. What they basically said is you have to provide notification that you sent a note to the employee that said, hey, we'd like you to come back, and they've rejected your offer. And then you also have to notify the state unemployment office that, hey, this person has a job, they just don't want to take it because they're making more in unemployment. Which obviously, if you want that employee back long term, that's a terrible situation to be in. And we all feel for the employees that are making more on unemployment than they do working. How can you blame them? It's incentives matter. It's the proof. So this program is going to lend itself to all sorts of potential other issues. We're going to talk about one other one later, which might be if you plan to never reopen. Okay, so the next example, we got a business with employees and we're still operating. Honestly, lucky you if you were in considered essential services and you kept your employees and paid them, and then you got different strategies. And this is what I was talking about that I had for me, where I said, hey, I'm going to increase salaries and pay bonuses, right? You can make a profit sharing contribution for your employees. Mid-year is unusual, but it's definitely within the rules. And if you're still operating, then shove more of this money at your employees and tell them that it's their job to go spend it in the economy to keep everybody else working and support the businesses that were shut down. Other options, if you don't have enough, add your spouse to the payroll, hire another employee. So these are other ways to increase the amounts that you spend to make sure that all of your money is deductible. Because why not? Again, why hand it back to the SBA when they're printing money left and right when you could hand it to your employees? So if you are still operating, then you just need to go in and calculate how much you're going to get. So if your rent expense, if your phone and internet and utilities is a smaller portion of your total, then you might need to give bonuses to employees, right? And please don't be the greedy business owner that goes, no, this all this PPP money is for me. Because that's not the idea. The idea is it's for you to retain your employees, and retaining employees, part of that is, hey, when the government hands out money for employees, we share it with the employees. So I hope everybody does that, and go in and calculate how much you're going to have forgiven. And I'm doing this on a continuous basis of every time I make payroll, that amount of payroll reduces the amount that I owe to the SBA because it's expected to be forgiven. And therefore you can look forward and calculate, okay, how much am I going to pay in payroll? How much am I paying in rent? How much do I have for utilities? How much do I have for interest on property that I've got, which is basically loans for equipment and potentially a building. Real or personal property means that anything for the business that you've got a loan on, and the interest is forgivable, not the principal. So you know what the expenses are. You go, how much are those going to add up to? Maybe I'm at 95% of the loan amount. So what do I need to do to strategize for that? I could give profit sharing contributions. I can give people bonuses. I can give, call it a hazard pay if people are still working, whatever you want to do. But make sure that you share the money with your employees. There's no reason not to. That's what it's for. And then it all gets forgiven. All right. So the last thing I want to talk about is businesses that you're pretty convinced that you're not going to make it. Either you don't believe that social distancing works in your business model, or whatever. It's PPP money must be used for allowable expenses to become free. But that doesn't mean that it can't be used. So money's fungible. So if you really believe you're going bankrupt, then all of a sudden you have a different planning phase. And this is going to be true with your PPP loans and your EIDL loans. Because here's the thing, the PPP loan, it's not attached to anything. It is unsecured, which means that if the business goes bankrupt, there is no right to go collect anything. There's nothing left of the business, i.e. we can't go after the owners. So for most of us small business owners, if we default on our loans, guess what? The bank's going to come take our house and our cars and anything else that we have that they can get their hands on and effectively force us into bankruptcy or agree to pay a portion of our debts, right? But these loans aren't attached to anything. So let's say that you got a $100,000 PPP loan, and let's say that you are personally signed on your lease with your landlord, right? Well, guess what? PPP money can be used to pay rent. So I could use this money to pay my landlord rent for the next 6 months, 8 months, whatever. I could work out a deal with the landlord that says, hey, I'm going to pay you X amount more in rent. But in doing so, you're going to take my personal liability. Let's say I have 3 years left on my lease, but I know this business is going under. So I'm looking at potentially personal bankruptcy because that's the only way that I can get rid of the personal guarantee with the lease with the landlord. Oh, shit, I don't want to deal with that. Okay, well, how do I get around that? Well, maybe the landlord will say, hey, if I give you 6 months more in rent, then we can cancel the lease then, and I don't owe you anything after that. I get that in writing, and I go, okay, I'm going to use this PPP money to pay rent to that landlord for the next 6 months because that's where my liabilities are. I'm going to use it to pay the bank for any other loans that I might have on equipment, and then I don't have any other money I'm personally guaranteed to back, so I don't have to go into bankruptcy and sell my house. I use this PPP money to do it, and I close down the business and go bankrupt. It's a strategy, and it needs to be considered if your business has got unrepairable damage, because I would rather have your business go bankrupt and walk away from a government loan, right, which is effectively pseudo-forgiveness anyway, right? If the rest of us are giving this money to our employees and it's being forgiven, then a business owner that's going out of business uses it to pay the landlord, and then they go out of business, and effectively that loan's forgiven, aka not repaid, and the SBA pays the bank back. Hey, that's good by me. I'm good with that. And same thing with the EIDL money, because if you got an EIDL loan for less than $200,000, it's also unsecured. So use your other money to pay for the things that are secured, and use the PPP money to pay rent. It becomes the unsecured portion. It's good for bankruptcy planning. So this is what I'm saying. There's no personal guarantees, right? So this is a strategy if you're winding down your business. EIDL loans, same thing. Under $200,000, no personal guarantee. So if you think your business isn't going to make it and you're getting an EIDL loan, don't get more than $200,000, because then you have to personally guarantee it, and then they can come after your personal assets. So if you got a $100,000 PPP loan and you got a $200,000 EIDL loan, you have $300,000 potentially to wind down your business, to pay back the bank for equipment that you might own, to settle with the landlord, and be able to walk away and potentially not have to file personal bankruptcy. Now, the other thing that you can do with that as well is PPP money can be used to pay wages, right? It doesn't mean it has to be, so it doesn't have to be forgiven now if we're going to forgive it in bankruptcy later. And what I mean by that is if I'm the employer owner, and let's say I own a pizza store, I only have 6 months left on my lease. I've owned the thing for 25 years. I don't see how with social distancing and the layout of the place that I have and the rent that I'm going to be able to make it long term. It's got to become a takeout place, not a sit-in big restaurant that I have right now. All right, so I'm on the hook with the landlord for 6 months. I owe the bank $30,000 for equipment and other loans that I have. And I'm looking at winding it down. Well, now I have, how long am I going to wind it down for? Well, I got 6 months left on the lease, but that doesn't mean because the lease is up, the business has to close down. So let's say I get $300,000 in total and I owe $200,000 between what I owe the landlord over the term of the lease, what I owe the banks, what I owe everybody else if I just were settling it all up. So I got $100,000 left. Well, what do I do with that? You pay yourself wages. Because again, you can use it, the uses, payroll, benefits, interest, rent, utilities. As long as the PPP money pays those things, those are allowable uses of the money, right? So we've got multiple strategies here. We've got strategies that if you want to get the money forgiven, you got that strategy. If you've got, if you're self-employed, then basically you're kind of locked in. Basically, they locked in self-employed people and said 850 seconds, plus rent and utilities that you paid. Now, if you do your utilities, you could basically do 3 months. So you have 3 months of phone, 3 months of bills, as long as you're, read the rules on that one, talk to your CPA. It's slightly tricky, but basically that's what they're going to allow. I think that's the one part where they're like, oh, we'll give them a little more flexibility here, of course, on the amount that's the least. So there's a bankruptcy strategy around this that makes a lot of sense. Now, this is going to be abused to no end because if you got a little tiny business, I mean, when I looked at this, I was like, wait a minute. Assuming I had, 5 employees and $100,000 of payroll or $40,000 of payroll, and I got a $100,000 loan. Wow. If I got a $200,000 EIDL loan and I got a $100,000 PPP loan, I have $300,000. I could use that to just pay myself wages for a few years and then go bankrupt. And there will be companies that do that. And that's 100% legal. There is no requirement. It says you must use it for payroll. So payroll includes yourself. Now, it caps you out on what you can pay yourself and have forgiven. But if I'm not seeking forgiveness because I'm looking at bankruptcy, then I don't care. And there will be small business owners who go, I'm going to just use all of that to pay myself and then bankrupt that business and start another one. And mark my words, that's going to happen a ton. And there's nothing the SBA can do about that. They're going to come harass the rest of us about the amounts we're asking for forgiveness. There's going to be a ton of these things that end up in bankruptcy and all of that money just gets repaid by the government, which, if according to Marco Rubio, it's supposed to be a forgiveness program, it's supposed to be grants anyway, then so be it. I'm not really worried about that. But what I am worried about is the small business owner who's personally attached. And knowing that and having lived that for the last 15 years of my life, knowing that, hey, at any time, if your business goes under, guess what? So do you. That's the risk that we small business owners take. And if there's a way that you can use this money to figure out a way to pay off your personal liabilities that you may owe, and that could mean settlement too. That does not mean if you're signed on a lease for another year and a half that you have to make all those payments with the landlord. You can go settle that. And as long as you get it in writing that it's settled and it's done and they don't have any further recourse against you, especially if you're giving them a lump sum payment. If you go back to your landlord and you go, look, here's the deal. I don't have enough to pay you rent and my business is done. So here's what I have the option to do. I owe you rent for, let's just say it's even 3 years. Could be $200,000. But here's what I've got. I've got $50,000 right now. I'll give you that $50,000 for a release. And then you can go try and rent that place to somebody else. Or I can end up paying myself that money, going bankrupt, filing bankruptcy, and getting rid of that lease in bankruptcy. You just forced me to go through that process. And how expensive is it going to be for you to try and enforce that and come collect on me? There's a lot of landlords who aren't even going to bother trying to collect this money, even though it's personally guaranteed, but they're going to go look at somebody's personal situation. They'll be, what am I going to do? Force that person to sell their home? Maybe. Force them into bankruptcy? Maybe. It's ugly. So some landlords won't do it, but some will. The Jared Kushner landlords of the world will. And if you haven't seen that episode of Dirty Money, go check it out. They're dirty. They will use their lawyers to try and suck every dollar out of you. They will force you into bankruptcy. And if that's the path that you have to go, then you have to know that, right? And prepare for it. But this could be a tool for those that are winding down their business to continue to pay themselves in the short term, hopefully set up so that they can get rid of all of their debt. You can go to your bank and do the same thing. Banks know that they're going to take some losses coming up. The big banks have set aside billions and billions of dollars because they know that the losses are coming. Huge losses in the oil patch. There'll be losses all over the place, right? So let's say you owe $100,000 to your bank on equipment and you have the lease with your landlord. It doesn't mean you have to pay them in full to settle. People take less all the time. Same thing with anybody that your business might owe money to. And vice versa. People are going to owe you money as a business. So when they go to, like when the question of uncertainty comes up, do you need this loan because of uncertainty? I have uncertainty. What if my customers stop paying me? Happens all the time. What if my customers are going bankrupt and they don't pay me? All of those accounts receivable that I think are good don't come in. If those don't come in, then I can't pay anybody else. And that's just a reality of business. And everyone would like to think that, businesses should have a big rainy day fund. They should have enough money to cover a year. Well, if you understand how businesses work, let's say a business works on a 10% margin. So business does $1 million a year in revenue. Maybe it makes $100,000. So maybe the owner pays themselves $75,000 in salary. In total, they make $175,000. Everyone thinks, they're living huge, right? All right. Well, if you want to have how many months of payments sitting on the books, I got to work for. So if I'm on 10% margin, I make $100,000 a year, but my expenses every month, right? If my incomes for the year is $1 million, my expenses every month are 90% of that. So I now have to have all of that money saved such that if I have no additional income coming in, which is the case for a restaurant right now, potentially, I have to still be able to pay out all of that. But I work on a 10% margin. So I'd have to save all the money the business made. And pay taxes for at least a decade to have, a year of no revenue. I can pay all the expenses. Nobody has that. It's unrealistic. It's just, if that was the business model, there'd be no business. So most businesses are on what we call the 60 to 90 day revolving going out of business curve, which means that if your customers don't pay you, if all of them decide not to pay you for 60 to 90 days, you're out of business because you can't afford for them not to pay you. Well, all sorts of things can be settled, right? So if people owe you money and they say, look, I'm going to go out of business, I can pay you 30, 40, 50 cents on the dollar, you also, as a business owner, would take that, right? Just because it's better to get something than nothing. And the same will be true of banks. The same will be true of landlords. So if your bank is going out of business, there is a strategy to potentially use this PPP money, use EIDL money to help pay yourself and pay off your other personal debts before you declare bankruptcy. So I just want to make sure that everyone knows that that's a strategy, but specifically what you can use that money for to not get in trouble. Again, payroll, benefits, interest, rent, utilities, those kinds of things. All right, that's what I got for this week on getting your EIDL loans forgiven. We'll come back next week and talk about the actual PPP form and the information that you're going to need with that. Thanks for listening. Catch you guys next time.